Hi, I'm Jim Jubak, and welcome to this week's Quick Pick video. This week's Quick Pick is Alphabet, or as most of us know it, Google. Okay, so right now, Morningstar calculates that Google is trading at about a 24% discount, which is kind of interesting given that Google's had a very big run up lately. Here's a chart for the last 6 months. And as you see, it built a base in here, 104, 108, and then recently it's taken off. Morningstar is still calculating, so we're at 120 roughly today. Morningstar is calculating that 154 is fair value, so it's still got a good run, but you missed this $10 move. But let me show you something else on the chart. You see this right here. This is the kind of cross that you look for. This is the 200-day moving average, and this is the 50-day moving average. You'd like the 50-day to be above the 200 because that shows decent momentum in the stock. I think what's interesting to me, as I did yesterday's video about hedge fund positions, is a lot of hedgies added Google, Alphabet in the first quarter. There's perception out there that the stock has been unfairly or unjustly pounded, that there was a sort of almost AI war hysteria that said Alphabet had fallen behind Microsoft, and that it was going to lose in the search business. And the company has since come out with new products that sort of match the Microsoft chatbot offerings. And what we're looking at here is relatively slow growth. Ad revenue was down about 1% in the first quarter. Total revenue up about 2.6% year over year. And the perception is that maybe ad is slipping, but it looks like what really happened is an economic slowdown, some problems with the shorter form YouTube's sort of stealing some revenue from longer form YouTube. But I'd say the company is really very, very solid. I own it long term, and I would suggest you do too. It's in a long term 5-year 50 stocks portfolio. So this is more a short term add to positions play, because I think over the next quarter or two, the stock could make up the difference between the 120 price where it is now and the fair value for Morningstar at 154. The PE right now is not, despite the fact that I think the stock has sort of an aura of being a value play in the tech sector, it's not particularly cheap. We're talking about a PE on trailing earnings of about 26. That's about a little on the low average side, because PE in 2021 was 28, 2020 was 34. 2019 was 29, so a little cheap. The stock is not one that's likely to get very cheap. So if you want to call it a relative value play, I think this is a good one to be in for the next couple of months, where you add to positions and then see where the market takes you. You might want to hold it for a little longer than that. But don't sell your long-term positions, add to them right here. Thanks very much for watching. If you like this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you get notification when we do our next one. We're doing about 3 a week, not always on the same day. If you want more of my stuff, including the portfolios, the long-term portfolio that holds Google, you can go to my free site, that's jubakpicks.com. Or if you want 6 portfolios, including the long-term portfolio that holds Google, as well as some options and ETFs, you can go to my paid site, that's jubakam.com. You'll find links to those both down below.